Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, September the 29th. The year's 2021. Let's talk trading. Dealing with loss. These videos are for educational purposes only. Your results may differ from mine. What is a loss? Well, in trading, it's when you exit a trade and the position went against you and you've lost money. Now, the thing is, you just lost money, but how do you internalize it? How does that affect you? Does it affect you? Why does it affect you? You see, in trading, losses are going to happen. They just are. Sooner or later, you're going to lose a trade. But do you let it affect you? And do you think of that loss as a catastrophic event? Let's just say you start out, you got $1,000 trading account, and you're starting trading, and maybe you're trading a dime a pip or dollar a pip, and you take a $10 loss. Well, that's 1% of your account. Does that rattle your cage? Does that mean you throw in the towel and you quit? I mean, how does it affect you? Or do you take it in stride and say, no big deal, I'll get the next one? See, the thing about trading is you don't want it to be, say, like a game of pool. When you lose your turn and your opponent comes out and wins the game, you never get another chance. You never get another shot. You just cleaned your clock. In fact, there's this one guy I play. His name is Jerry, and I nicknamed him the professor because whenever he's on the table, class is in session. You miss a shot, and then usually that means he's going to win the game. So I like playing him because he makes me focus and concentrate, and I realize what not to do. And he's a really good shot and a nice guy. Anyway, back to trading. The thing about taking a loss is you cannot let it get you out of your game. So, for example, we use a lot of sports analogies, myself and Walmall when he's on. We talk about baseball, we talk about football. You know, if you're playing a game and something happens and you give up a run or you give up a touchdown, hey, is the game over? No. You got to get back in the game. You got to keep your head in the game and shrug it off, shake it off, and just go back out there and do your job. Well, the same's true in trading. You get in the trade, you get your signal, and the market moves against you, and you lose. It happens. And then you get your signal, and for whatever reason, you don't take it, and that trade would have been a winner. That's the worst thing that can happen. That is worse than a loss because now you've taken yourself out of the game. So you got to keep your head in the game no matter what your last trade was, whether it was a win or a loss. And that's the takeaway. So that's how you deal with a loss. And just make sure you have your risk management in place so you don't lose any more on any one particular trade than you're willing to lose. This just simplifies it so much, but there's so many traders out there that want to make things complicated and complex. Okay, we've got today and tomorrow's the last trading day of the month. You can see we're 25 pips off of the monthly low here. So I would assume we're going to be closing red for the month. All the gaps filled. You can see here we're 170 pips below the previous week's low. Oh, and I added a column. One of the traders who donated asked, was there a way to get yearly range? I go, yeah, it's in the dashboard. So I put the yearly range here. I guess I'll have to write an indicator to do average year. But the thing is, some of these pairs haven't gone back that much. I think we can maybe get a 10-year average, a 5-year average, something like that. But does it really matter, the average range, when you're talking about the year? I mean, what difference does it make what the yearly range was 10 years ago? It's different from 10 weeks ago or 10 days ago. Yeah. But as far as our trading, I don't really think, that really is going to tell you anything. I think you should focus on monthly ranges, looking at monthly range expansion, weekly range expansion, etc. But as you can see here at 35.41, price got above the opening range for the year and then went negative and dropped like a rock. And look at this. The opening day for the year were 206 pips below it. Did anybody short the yearly open? And yesterday we broke out of the daily, weekly, and monthly inside bars on the pound. Today's range is 143 pips. Now this is interesting. The pound dollar has a bigger range than the pound yen. I don't know if I've seen that before. I just noticed it once today. I'd have to, not that it really matters, but it would. I'm kind of curious how many times that's happened. That I could write an indicator, but it's not that important. Just a curiosity thing. You can see we're 25 pips off the daily low right now. So we missed the pivot point so far today at 35.90. 153 pips away from it. I think I skipped something. Yes, I did. The rats, green rats, are feasting at the moment. In fact, I got out of my trade so I could make this video. I was long down here. But this seemed like a good place to be long in the smart rat zone here, the green rat 25 level. You can see all the price action off of that 25 level. So now price needs to break out of here, this level, these wick zones right here. Actually, first it needs to get out of this one. So we'll see what happens. In fact, we're at the bottom of the hour right now, so we'll see if the reversal continues. And it said near the pivot bias is short. We never really got near the pivot. Near S1 bias is long, but the pound is pushing down. So even though indicator or your plan is telling you one thing, use your eyes, see what it's doing. And this is on an H4 chart. And one of the things you don't want to do is step in front of an H4 freight train. So, because you'll get run over. And what's really interesting is we actually came down to the monthly S2, and you can see that bounce right there. Test it twice, and it's moving up now. Pivots, we missed the pivot today. We missed the pivot back on the 20th. So we'll see what happens end of the month tomorrow. The wick zone in and out of the lower one. And on the trading chart here, the M5 chart using the M1 lower high, higher low. You can see we had a trigger here. We had a trigger here, came back down. Then there was a trigger here. And then another one here for the lowest. And on the standard DSR reversal, you had a one here and then this one put in, then we got another one. So right about here, that would have been your DSR reversal, or you could take it at this level. And these dots and these dots are the levels. So these are the highest lows right here for the 1 minute, and then down here are the lowest highs. So right now, in a situation to set up short, but with H4, with all these green, you might want to think twice, preferably wait for a 3-ball, and then you can jump in short. On looking at the wall mall trades here, this hour triggered short, gave you an opportunity to get 2, maybe 3 pips. On the long, right now, broke out of the previous H1 high right here. You can see the wall mall triggered, and you're about 7 pips to the good. Actually had a chance to take 10 off the table. So even in these crazy days of the pound, and let me change this range. I want to do something here. So show you about the last 10 hours of trading. And you can see we've had some big ranges, almost back to normal, what we're used to seeing. So over the last 100 bars, average was 18, and you can see the percentiles, with the exception of last hour, were all above 70. So basically, in about the top 25%, or technically top 28%. And once again, showing the rat, the smart rat here, along with the wick zones. And you can see here the wick zone. We were just in and out of it. I think somebody was asking me about the zones dashboard. They were asking about the 2016, but that one was a fixed board, and that's what prompted me to do something, give the traders all the power where they can pick their columns, they can order their columns, etc., as opposed to have something fixed. But this is what I like to look at. So right now the pound is in the lower ATR zone. So it's okay to buy based on ATR. And right now we're 102 pips from the open to the close. 102 or 102% of ATR, not 102 pips. And so since we're 25 pips, we're outside of the rat zone right now. And frequency distribution here. You can see for the on the hour, high minus low. Usually you're going to get a difference greater than 5. And the high minus the open, usually you're going to get something, you may get something greater than 10, but only 1 out of what? Or 3 out of 10 times, possibly. So high minus open, these are buy zone traders. High minus low, this is just the range. So fellow traders, just remember, don't let taking a loss devastate you. Shake it off, take your next signal, and then at the end of the day, you can look and see what you may have done better. So Remember, it's not what you trade, it's how you trade it. So go out there and drain the banks or break the banks. This is the Rumpled One, over and out.